This is a Brooklyn-bound 2 train. The next stop is Wall Street.
Stand clear of the closing doors, please.
Welcome back. This is Not Your Advisor with NYU Grad. On Thursday, April 17th, just a quick reminder, the markets are closed on Friday, so there will not be a podcast, and I'll be enjoying this 3-day weekend. Also, a quick reminder, there is a discount in honor of Tax Week in the U.S. The link to get the discount for the first year on annual billing is notyouradvisor.com/tax day. Let's jump right into today. I want to summarize it. Basically, obviously there's UNH or United Healthcare news pre-market, and I'll cover that in a second. But when I look at the complexion of the session on Thursday, on April 17th, what it tells me is that Wall Street sold the Mag 7 all day and used the bouncing markets to do so. So let's jump right in, and I'll tell you why I think this. So taking a quick look at new highs on the NYSE, we had 68 versus 175 new lows. 69% advancing versus 27% declining, 82% below its 50-day and 79% below its 200-day moving average. Now, with UNH being a Dow 30 stock and UNH being down 22% and the Dow being weighted by the highest priced stocks, it's going to have a bad day. The Dow closed down 527 points. Now, pre-market, we went from wherever we were to down 1,000-point swing after UNH reported. So that really leaned on the market south all day. But the NASDAQ and the S&P kind of bounced around and closed near its previous close on Thursday. So the NASDAQ was only down 20 points and the S&P was up 7 points. So pretty much a nothing burger there. However, looking at all of this data in context of the Mag 7, it's not good. The only Mag 7 in the green today was Apple, up 1.3%. NVIDIA continued its sell-off, down 2.9%. Microsoft was down 1%. Amazon was down also about 1%. Google down 1.4%. Tesla was down marginally, down 0.07%. And Meta was down 0.17%. Looking at sectors, and again, the Mag 7, for the most part, outside of Apple, sold off in context of almost every sector being green today. So the one-day performance, you had energy up 2%, consumer defensive more than 2%, real estate up 1.5%, utilities up 0.89%, industrials 0.6%, financials up 0.6%, consumer cyclical 0.5%, basic materials up 0.25%. Technology was down almost 0.5% today. And when you look at technology, the majority of that is going to be weighted to the Mag 7. That's why I'm saying that. If you missed my Substack note, I highly, highly, highly recommend that you check out this new interview by Adam Taggart of Nick Gurley from Reventure Consulting. They walk through multiple states on the state of the housing market. It is chock full of data. It's not narrative. It's not wishy-washy guessing. They go through data specific to these metros and states. You should definitely take a look at this. What else kind of stood out? I'll share a chart with paying subscribers, but just verbally if you're listening to this on the radio or on the podcast, like on Spotify or Apple. If you draw a fib retracement anchored to the low the day where tariffs were paused to the peak, that fib retracement levels, or those fib retracement levels, we basically hung out at the 50% line. And again, 50% is not a fib retracement, but typically it will be included in the fib retracement drawings. It is a retracement. It's just not a fib retracement. And when you look at a 5-minute chart, it typically will react there. And if you take a look at the NQ, you can see that we hung around that 50% retracement line all day. We actually closed at it. So it really was a nothing burger day. But despite that, the Mag 7 got sold except for Apple. And the semiconductors were pretty weak as well. So that's kind of what the tape was telling me today. Volume was ho-hum. Looking at what was strong, what was weak, I'll go through this list. In the S&P to the upside, you had Eli Lilly up 14.9%, Fidelity National Information Services 9.6%, Dollar Tree 7.6%, Diamondback Energy 6%, Halliburton 5%, APA Corp 5%, Baxter International 4.4%, Best Buy 4.2%, Nike 4.2%, Dollar General 4.2%, Seagate 4.1%. In the NASDAQ 100, Diamondback Energy 6%, Old Dominion Freight 3.7%, Trade Desk up 3.4%, Costco 3%, AppLovin 2.75%. What was weak? Obviously, United Healthcare, also in the S&P as well as the Dow, down 22%. Global Payments down 16.5%, Snap-on Tools 7.4%, Humana Health 6.9%, Marsh McLennan 4.1%. In the NASDAQ 100, NVIDIA down 3.4%, Workday 2.8%, Axon Enterprise 2.5%, Broadcom 2.4%, Lam Research 2.3%. Again, a lot of these are semiconductor names. That's not good news. Let's switch over to the macro.
We can't forget that this is just a small taste of the in-depth analysis that Not Your Advisor provides. They don't just throw numbers at you. They connect the dots, find those hidden trends, and help you understand what's driving the markets.
If you want the full picture, you got to check out the full Not Your Advisor episode.
Don't forget to subscribe to notyouradvisor.com.
And all their premium content. I mean, it's like having a direct line to what's really going on in the market.
It is. It really is. They cut through all the BS and give you the kind of info that you just won't find anywhere else.
Think about this. Investing is all about making decisions that work for you and your goals. You're the one in control.
Not Your Advisor can give you the map, but you choose where you want to go.
And with that empowering thought, we'll sign off. Happy investing.
Stand clear of the closing doors, please.